All right, guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you?
Hey, man, doing great.
Guys, we're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate on your Spotify, YouTube, Facebook, wherever you want to catch your podcast or listen to us. Show sponsors are listed on the bottom of your screen there. Can't do this podcast without them. For those of you listening, we've got CrestCore Property Management, Cortland Financial, Triumph Construction, Will Griffin with Griffin, Clift, Everton, Mashmeyer, and Local Title. Happy to have those guys on board.
Yep.
I help buyers and sellers every day, guys. Dean at CrestCore.com. If you have any questions about selling or buying anything here in Memphis, get me that email, and I will look to get you started with our team. Let's jump right into this today. We're going to talk today is a little bit it's a real estate related, but we're not going to be talking about a specific house or a zip code today.
Gotcha.
It's a little bit more of a mindset kind of topic, and we're going to kind of dive into real estate investing versus your traditional investing routes, whether that be stock markets, bonds, whatever you can create and come up with another traditional investing route versus just an old, your old boring real estate, investing route, right? All right. So what are some of the things? Let's list those things. What are some traditional investing or what are ways that people traditionally invest outside of real estate?
Yeah, I mean, I think it's mutual funds. I think it's the stock market. Obviously, it's of which mutual funds are subset. Buying individual stocks. You can invest in businesses, privately held businesses, venture capital kind of stuff. That's a little more exotic for folks. But those are all kind of like equity, kind of ownership. Again, the most passive, quote, passive that people are going to do is some type of stock market, whether it's through their 401k, through some type of Roth IRA, a regular IRA, and quote, as people think about retirement kind of saving. Then there's the debt side, putting money in a CD at a bank, putting money in a bond, putting money as, kind of depending on how you want to do it. Those are kind of the two big broad brush ways.
I mean,
to go about it. Real estate is a little bit different. I mean, it's ownership, but it kind of has its own unique flavor.
It does. And
investing. Real
estate to me gives, so I decided this is super bland, but when I made the decision years ago to kind of put all of my investing eggs into real estate, right? I looked at it in this route, and this is a simple mind from a simple person's thought process, but I thought to myself, pour money into a company where I know nothing about the people that are running it. Yep. I don't know anything about their moral compass. I don't know anything about their business practices. I just don't know anything other than the name of the companies, maybe something that I've heard of, right?
Yeah.
So I thought to myself, hey, what happens one day if I invest all this money 25 years down the road, I got millions of dollars invested into this company or this fund or this thing, and then something happens that's out of my control. Company loses 30 and 40% of its value because of some actions of some others.
Right.
That's where I became afraid of it. Now,
and that happens, right? I mean, we're old enough to remember Enron and Tyco and WorldCom that were.
Could you imagine being wrapped up in the Enron scam? Yeah. So there's kind of what I thought to myself, okay, that's something. Plus I didn't know a whole lot about the stock market. My family wasn't, we weren't, my dad wasn't extremely involved in that kind of thing. Okay. So I just don't have a background in it. So I wasn't extremely versed. Well, then real estate came along and I began to compare. Even as I got older and more mature and made more money, I was like, do I diversify and take? But I just decided not to, because it's, for one, we always preach about being good at one thing, and I don't claim to be good at a bunch of stuff on this planet, right? I really don't. I'm not a jack of all trades.
Yes,
I'm not. I honestly, I cannot do a lot of things that some other guys and gals can do. One thing I can do is sell and buy real estate, right? That's one thing I know how to do. And that's one. So I thought to myself, why venture off here? Something I'm not real sure. I wanted to stay with something that I knew. Never mind some of the other things that come with it, the tax ramifications, the benefits that you get from that. I'm sure that there's some tax benefits in investing in the stock market, but I imagine you got to take a loss.
I mean, again, it depends on how you do it, but it's not like real estate.
That's right.
And I go back to, and we talk about it a lot on the podcast, The Millionaire Real Estate Investor, book by Gary Keller. I mean, the whole first thing is thinking like a millionaire and kind of what it's all about, which is why stocks are good, but why real estate is better for what we're trying to accomplish. They say real estate is the most able investment.
Oh, I love
And
that.
it's got 8 ables. It's accessible.
Okay.
It's appreciable.
Yep.
It's leverageable. It's rentable.
Okay.
It's improvable.
For sure.
It's deductible, depreciable, and deferrable. Taxes is kind of what we were just talking about.
For sure.
It's stable.
Yeah.
And it's livable. So it's like all these things that the stock market is probably maybe 1 or 2 of those. It appreciates. That's it. Of those, so stock market is more accessible now than it ever has been. So okay, maybe it's 2 of the 8, but real estate is all of those. You know, we can all do it. You can live. You can house hack. I think we had an episode a couple of weeks ago about house hacking. You know, I'm helping my daughter house hack.
Right now?
Yes. Yeah. We're under contract. We're applying for her loan. She's moving into a house. She's house hacking and renting to her roommates.
Oh,
so she's 21. So it's like and I'm saying that it's accessible to somebody like that. It's livable to somebody like that. So it's got some things that the stock market and traditional investments don't have as a way to do that. As a way to invest, in a way to build wealth. And that's what this is about. So
I like the real property aspect on it. I mean, I can see it.
You can touch it.
You know, I mean, I know I guess they send you some paper or whatever with your stock purchase or what have you, but I can put my hands on it.
And you can improve it kind of to
make it
your
better.
point. You can make it better versus like what you said. You can go to Apple Store and buy 1 iPhone, maybe your whole family, maybe you buy 5 iPhones, maybe you have a company and you can buy 10 iPhones, but like that's not going to make a dent. Whereas like if you do something to your property, it can make a difference.
A huge difference.
It can make you finish off. My first rental, I've talked about this. My first house I lived in.
Yeah.
We finished off the attic, added a bedroom, and created more value in that property.
Yes.
And now as a rental, it's got more. It's generating more rental income because it's got an additional bedroom. So again, it's an improvable. It's one of these things. What makes real estate distinct and really good.
That's right. I love it. I mean, in putting your hands on it, the updating, you never know what it's going to be in years. I mean, imagine buying a commercial lot here on Summer 35, 40 years ago for next to nothing what it's worth now with all the activity. So there's a bunch of different things that you can take with it. It was the reason why I chose it is I can put my hands on it. I can see it. It can improve. It pays me every month. You know, that's another thing. It's like you're investing in some of the stock markets. Like, I guess they can pay out dividends, but I mean, you know, most people roll that right back into. You need a lot of something for that to really pay you some dividends that matter, right? So let's be honest. So, but a home can pay you a couple $100 a month for eternity. So there's kind of where, and then at the end of the day, you still have your initial investment. So that's one of those avenues and that route. I mean, the fact that I love the 8 A's.
You can leverage it.
That's so
great. If you don't have the funds, I mean, in the stock market is not wise to leverage because it has a lot more fluctuations. And we've talked about this before. The stock market might fluctuate more.
Yeah.
And the bonds, the real estate returns more than bonds. And it fluctuates less than stocks. So it's a lot more stable. I think that was one of the 8, stable. And you're like, oh, what about the crash? And you're like, okay, of the past 50 years, you had 2 years where it kind of dipped down a little bit. And if you had held it, man, those things ramped way back up. Or if you were really smart and you bought during that time because everything was on sale, that was a great opportunity. Whereas the stock market, it's way more, volatile.
Repeat what you said at the very beginning. Where
I don't remember what I said.
I know.
Tell me.
Because you were going on something good where you said it's more the stock market's less volatile or the real.
What I was just saying. I'll say that again. Is that the stock, the real estate.
The bond market.
The real estate has a higher return than the bonds.
Yes.
And it has less volatility or less fluctuation than the stock market. So, I mean, it's like you've got this safe investment. This is a quote, and you look it up. It's a FDR quote that said, real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care. It's about the safest investment in the world.
There you go. There's another reason.
That's why. I mean, and for me, it's like I've got 3 deep convictions. I told you about that. It's like I believe everyone needs to be an investor.
Yes, I do too.
Everybody needs to be an investor because your job isn't going to provide for you.
Not anymore.
As soon as you quit your job, like how's you get income? You got to invest. So that's fine. And I feel like real estate is my second conviction is real estate is a great way to invest. Mm-hmm. You got to be an investor. Real estate's a great way to invest. And I believe that single family rental homes is the best way to start investing in real estate.
Yeah, I agree 100%.
So those are like 3 convictions. And not only are they convictions, like you and I would say, like, we've built our life on those. Our whole livelihood and everything
we're talking about
us.
Here today is 100% of everything we've done. All of it.
You need to be an investor. Invest in real estate is a really good way. And then start with single family homes.
And I've just stuck with it.
And we've stuck with it.
And then maybe one day in my life I'll do something different from an investing standpoint. But I don't have the vision for that. I want to be excellent at this
the
one
trick
thing.
pony. But and that's the thing with I think it's Buffett and others who say this is like there is a lot of practical wisdom in diversification. Mm-hmm. That's fine.
Yeah.
But there's also kind of spreading your eggs in a bunch of baskets. There's also put all your eggs in one basket and watch the basket.
Yeah.
and watch the basket.
Mother hen
that basket. And that's what I think that's a little bit what we do here.
Oh yeah. That's a lot.
Is we put our eggs in this basket and we watch this basket and we get on this podcast and we read and we talk to people and we do all these things for our rental properties to make them better and better and better. So
I think it's great. I think this topic could be one that, please comment here below. I love the activity.
Yes.
What do you think? Real traditional versus traditional investing versus real estate investing. What are your thoughts on it? These are the reasons why we chose this route. These are the reasons why I'll continue to choose this route. Now, we played around with Apple and Microsoft and the ones that you can't, they're just there, maybe, a little bit, but I still know nothing. I mean, even now after 23 years in the real estate business, when I finally just, decided, hey, I want real estate versus this, I'm still only really invested in real estate. I might have a little knowledge somewhere else, but again, I'm focused on this one thing. I think that's what I want everyone to kind of take from it is, whatever you choose, we hope you choose real estate out of this podcast. But I mean, to me, it's whatever you choose. Let's become really good at it and know it well and know everything about it. I mean, that's one thing I am proud about. We talk about all these things, all that stuff I know very little about. We talked about it before this podcast. I know very little about those things, and that's great for me because it allows me to focus on these other things, right?
And I've got the schooling, the training, the on-the-job experience, whether I worked on Wall Street, I've got some letters behind my name, I've got some schools behind my name, and all that experience. And and a lot of that is way over my head. And what I really liked about real estate is that it's simple, especially rental real estate, because it's like, you've only got one source of income on a single family home.
The monthly rent.
The monthly rent. So it's like that is very simple to understand. And almost everybody has rented.
That's right.
At some point, so they get it.
Yep.
And then in my mind, you've only got 6 expenses. And that's if you leverage it. You got your principal and interest if you leverage the property. Mm-hmm. You got your taxes and insurance. Mm-hmm. And if you borrow, it could be the PITI. Yep. It could be one. And then you've got maintenance and management. So the maintenance expense for the properties and the management expense if you have somebody manage it. So and
that's it.
It's it. Those are just 6 expenses and 1 revenue line. It's like, I can get my head around that. I can understand that. It worked for me. I can scale that. It makes sense. I can put it on a spreadsheet. I don't have to have all these different variables. Mm-hmm. And it's like, okay, I can get that. And okay, potentially I could leverage that. I could borrow money against that. Mm-hmm. It put debt on it because I can understand these 6 components and how that would play out a lot better than trying to project all the other things with equity investments and stock market stuff. It's just like, it's way, way above me. And it's like, okay, I get a rental house, especially if I bought it and house hacked it and then moved on. Yeah. Like, okay, I'm going to rent this house. It's paid down pretty good. If not paid off, then like,
I love it. You're like, I'm like you. It's simple. We can run. I can handle this. I can handle, scaling this. This is not anything that gets any more complicated the further you get down the road. It's still the same thing.
each individual house.
It's the same thing.
It's the same thing.
I mean, it gets complicated in the sense that you might have more to deal with, but
Correct.
it's not, that house doesn't become more complicated if you own the one or you own 200. That one house, it's the same scenario. That's what I do love about it. Like, you can own 250 houses, right? And is that a bigger deal than one? Of course. But is it no, it isn't.
It's the exterior of the house. It's the interior of the house. It's the tenant in the house.
Same thing.
It's the same thing. That's what I love it, because it's the same process. And though technology has helped do different things to manage the house, it's still the same process it was 25 years ago of like, the house is vacant. It needs to be made rent ready. Mm-hmm. You need to go out and market it and find a renter. They need to sign a lease and move in. They need to pay their rent every month. You need to do whatever maintenance needs to take care of it. And then there's a little left over most months. Some months you have to put a roof on. Some months you have to raise the water heater.
So it's not splitting the atom. It's a simple process. That's what I do love. That's what I do tell people. It's like, hey, what I do selling real estate, what we do investing in real estate is nothing. It's not hard. It's hard work.
Yes.
Okay. So there's a difference.
There you go.
It's
simple,
not
but not easy.
That's right. But it is hard work.
It's hard work.
What I do every day to sell real estate is not extremely difficult. I'm not, racking my brain. I can't figure this out every day. No. But I am in here early, and I do stay here late, and I am on the phone, and we do this every single day. So it's like, there's the hard part about it. And that goes for just really any of this. None of this is going to come easy to you. So breaking them down between traditional investing, real estate investing, I thought was some good info that we could get out and get to our listeners.
Remind everybody
why we're doing this.
And for you beginner, I mean, it's like, hey, this is, again, whether it's these 8, whether it's other things, the convictions we have, whether it's a quote from FDR, there are reasons why real estate's a great investment.
Anything else? Guys, great show today. Appreciate you tuning in. We'll see you next time.